Well, Uber topping second quarter revenue estimates and issuing an upbeat forecast for the third quarter. The rideshare company also announcing a $20 billion stock buyback, but the shares are under pressure. Joining me now, John Blackledge, TD Cowen Managing Director and Senior Research Analyst, and Yahoo Finance's Pras Subramanian. Pras, let's start with you. What are the top takeaways from these results?
Yeah, I think overall, I think it seemed like a pretty strong quarter. Revenue up 18% year over year, adjusted EBITDA up 35% to 2.12 billion. Monthly active platform users up 15%, 180 million users there. Kind of gives them confidence, they said, to announce this $20 billion share repurchase plan you mentioned. But the stock is up like 50% year to date, so shares aren't exactly cheap here. Maybe that's why you're seeing some of the movement a little bit downward here. But they also also their guidance for Q3 better than expected. So seems full steam ahead here for Uber. I think the business is sort of rolling on strong here as we go into the back half of 2025.
John, what do you think here? Is this just a valuation issue that's seeing these shares under pressure?
Yeah, I mean, yeah, it's up, yeah, almost 50%. It was a great quarter. The guide was great. I think one thing that I will call out was this record number of monthly users, 180 million monthly users, and it's driven by a number of things. Low cost products, premium products. They're targeting different demos, household income, different age groups with the teen accounts and senior accounts. But there's actually still a lot of runway to go. One thing that they called out in their top 10 markets, only 20% of their annual users are monthly users. So a lot of runway for user growth. And even going back to the IPO 2019, we thought the model would be driven by users and frequency. And you're seeing it here with the record number of users, and that user growth at this scale is pretty phenomenal.
John, if I understood correctly, they also said only 20% of users use both mobility and delivery, which was something I was actually pretty surprised about, right? That I assumed kind of if people use one, they tend to use the other. So are you pretty confident in their ability to get those numbers up as well? And how key is that going to be to growth going forward?
It's definitely big. And yeah, they made one call out. I think 30% of new Eats customers come from the Uber ride app. So yeah, that's something they're definitely focused on. And it's actually one of the areas that could drive margins even higher. It helps with customer acquisition cost. But yeah, Dara was a focus on the call, and I think they'll drive that further. And remember, they're in about 70 markets for mobility, about 30 for delivery. So there's 30 markets that overlap, and so yeah, that should continue to grind up higher as they focus their efforts on that.
And Pras, one of the other themes that, of course, is emerging, not just with Uber, but with its competitors, is the whole autonomous universe now. And Dara on the call really emphasizing it's early days still for that, but he did talk about some of the partnerships here. What should we be focused on that front?
Yeah, I mean, there's a big initiative there to kind of go back into the robotaxi business, working with Lucid and also a company called Nuro, which has the autonomous OS sort of software. I spoke to Lucid's CEO yesterday and talked about how they're really excited about this deal, and it's for a minimum of 20,000 EVs. They say it could even be more, and that's sort of part of their package. And they think that Uber, sort of selected them because they were the best in breed. Well, that's an argument we can have later. But the bigger picture is that Uber is definitely leaning into the robotaxi sort of segment here as they see Waymo take off, Tesla in the space as well, trying to get their offering in that. But Julie, I know we talked about this earlier too. They're also doing things like adding the ability to add women drivers for when customers are depict the gender of your driver. I think that's a good thing. But we also saw a New York Times report today, right, about how it's a growing liability issue for Uber, that they're sort of maybe dusting some of these things under the rug as they try to grow.
Yeah, the headline on that New York Times article, Uber's festering sexual assault problem, not what you want to see when you come out with earnings, for sure. And I should mention Lyft, by the way, a while ago introduced the option to have female drivers. So Uber's actually following on its heels in doing this. John, I did want to ask you, I'm not going to ask you about that. I am going to ask you about the AV piece of all of this and kind of where Uber fits in and how big that market is. In other words, is it going to be a sort of winner takes all, or is there lots of room for AV in the future?
Yeah, they have 20 AV partnerships across mobility, delivery, and freight. They're going to do 5 AV deployments in the back half of 2025. They're in, as they say, year one of this 10-year transition. We do not think it's winner take all. And kind of our house view at TD Cowen is that Uber and Lyft will be the demand aggregators for AV over the long term. As the leading rideshare marketplaces, they can maximize the utilization of the expensive AV technology. And just if we click to Waymo, which is exclusively on Uber in Austin and Atlanta, just take Austin, for example, which launched in March. They're already expanding the geo zone. They're adding hundreds of vehicles. And Dara said it's having, a halo effect on rideshare in Austin, meaning, it's increasing the TAM for rideshare. There's certainly a novelty part of it, and particularly for tourists in Austin. Yeah, zooming back out, they have a number of partnerships, AV partnerships globally. We don't think it's going to be winner take all, and it will be, kind of positive for the rideshare industry over the long term.
And John, bottom line, when it comes to Uber and the fact that it's already had this big run this year, is trading near a record, what do you think propels the next sort of leg of growth for the stock itself?
Yeah, I mean, there's probably maybe a little bit of upside to numbers, and I think we can argue for multiple expansion here with where they are with the AV narrative. And the AV narrative for Uber has kind of ebbed and flowed since early last year, but they're in a really good spot with the number of partnerships that they're accruing and they're going to be deploying in the next year and a half. And so with their growth rate, I mean, EBITDA grew mid-30s. That's where it's kind of been tracking. We have I think like low to mid 30% EBITDA growth the next couple of years, and the EBITDA multiple is at like 18 times. So you can kind of argue, or a little bit above that, you can argue for multiple expansion, and that's one way for the stock to kind of break out from the kind of 90 area and maybe drive upwards to 100 and 100 plus. Our price target's $104 right now.
Now to Lyft as the company's second quarter results hitting the wire. So let's get those to you. Q2 EPS 10 cents. That is versus an estimate of 27 cents. So it looks like we fall short of estimates on that front. Just looking at the top line, Q2 revenue, $1.59 billion. Street was closer to $1.61 billion. Just looking ahead here, they're looking for Q3 gross bookings. They're calling for $4.65 billion. The street was closer to $4.8 billion. And Q3 adjusted EBITDA, $125 million to $145 million. This, you can see the reaction of the stock. We're down more than 6% here, David, in the after hours. What do you make of it?
That's an absolutely very difficult report in my mind. I mean, it was, like I said, I mentioned it was all about guidance moving forward in the future, but it looks like Lyft is going to continue to lose their battle against Uber. I mean, they're already underperforming Uber by 37%. So there's kind of two wrench in the spokes of the tire right now, in my opinion. A very, very poor guidance metric. Now you have negative earnings per share growth on a year-over-year basis, and then you just have the continual headwind that they continue to lose out to Uber. So, stock down 8% when I just mentioned when stocks miss on the top and bottom line, they get absolutely crushed by about 8%. Seems like it's right in line with that right now.
Shares of Lyft recovering some ground after losses when the rideshare provider reported earnings. In the second quarter, Lyft had over 26 million active riders. They spent a record $4.5 billion in gross bookings in the quarter, though sales did come in just shy of Wall Street estimates. Joining me now, David Risher, CEO of Lyft. Good to see you, David. Thanks for joining us.
Good morning. Nice to see you.
So it was interesting to see the sort of turnaround in the shares here with that sales miss, but then the other strong metrics like bookings. I did see some commentary this morning raising concerns about ridership share in the U.S. What kind of trends did you see in the quarter?
So we have our highest share at the end of the quarter since I started, which was about 2.5 years ago, which is wonderful. And I think whenever people talk about share, in a sense, I sort of think they're missing the big picture, which is there are 161 billion rides in the United States people take in their cars every year. And we do, 800, 900 million. The other guys might do, a couple billion. So it's 2 to 3 billion between the two of us. So this is a growing multi-billion-dollar market that grows, mid-teens, quarter after quarter after quarter. You've seen that. We're profitable now. We're cash flow positive. So I sort of think some of the share stuff loses a little the sort of big picture, which is there's so much room in this market for us to do well, and that's what we're doing.
And it looks like you guys are expecting EBITDA to continue to improve here. What are some of the drivers here behind that profitability push?
Yeah. I mean, we've been talking about this for a while now. I
Yeah.
always say the same thing, which is customer obsession is what drives profitable growth. So let's look at our customers. Remember, we have two drivers and riders. On the driver's side, we now have a 29-point advantage in preference over the other guys. When you ask drivers who drive on both apps which they prefer, 29-point advantage for us. It's because of all kinds of things: earnings guarantees, reference letter automation that we've done, or all these different things we've done for drivers. And then on the rider side, never had more riders, never had more active riders, never had higher frequency, quarter after quarter after quarter of growth. Why? Lyft Silver for older folks to get them out and about. Price Lock allows you to put a cap on your, on surge pricing. Our new United partnership, which we just launched, that obviously doesn't show up in today's growth, but that'll show up in tomorrow's growth. So you do all of these things, and you do them well over and over and over again, and that's how you get a profitable company that also generates a lot of cash and turns into be a really strong business.
I'm glad you mentioned United. I happen to be a Mileage Plus member, by the way. So how much do you think that is going to contribute to growth going forward?
It's going to be a great partnership. So we just announced it yesterday. It doesn't come into effect till later this year. But here's what I can tell you: you're going to get miles, United Plus, Mileage Plus miles, and I'm a long-time Mileage Plus guy. I'm stopping myself from telling you my Mileage Plus number because I don't think the security guys would like that. But I know it so well I can tell it to you. It starts 003. Anyway, we'll move on. But the point is, every time you take a ride, whether it's to the airport or just down the street, you're going to get miles, and that is fantastic. That's going to be great for riders, and then they'll get even more miles when they do what we call high margin or high value modes like Black or SUV. And it's going to be great, and it's great for United as well because it helps make their Mileage Plus program even more valuable.
I got to ask about autonomous driving, because there was some talk that the Waymos of the world are starting to maybe take some share in the US from human-driven vehicles. I know you guys are now doing a partnership with Baidu in Europe, and you're in Europe, by the way, newsflash, you're in Europe as well. So how quick is that runway still going to be? It seems like it's now, after talking about it for a very long time, finally it's becoming reality. What do you think then the adoption speed is going to be like?
Yeah, so a couple different things there. The first thing I would say is I think this is a great, great wind at the back for rideshare. And the reason I say that is because as autonomous vehicles enter the platform, what that means is that there's a new interesting product, one that's safe, one that's reliable. It does all sorts of really interesting things for people. And we've seen that. So in the markets where we see AVs versus the ones we don't, we actually see something like 5 times industry growth in those markets. So that suggests that it's not just about grabbing share one or the other, it's about expanding the market. And remember, a hybrid network, which is what we're building when you have human drivers and autonomous, means best of both worlds. If you want an AV, get one. If you don't, for any number of reasons, or one's not available, have a human driver. We sort of love that. So if you think about that from a sort of overall market perspective, I think it's only good. And as you said, we just signed a big new deal with Baidu, the world's largest AV supplier, actually, 11 million, I think, rides with no driver in the car. And we're going to be bringing them to Europe, which is wonderful. And then here in the United States, over the summer, we're going to be launching our partnership with May Mobility in Atlanta, and then with Mobileye and some others, Ben Teller, next year. So a lot of interesting things happening in AVs. It's still very early, but it'll be like one of these S-curve things, where it kind of seems like it's growing and growing, and then all of a sudden they'll be everywhere over the next, call it 3 to 5 years.
Well, we'll keep talking about it, I'm sure. I'm glad you did not give me your Mileage Plus number. Your security people are very happy for that. David, it's great to see you. Thanks for joining us.
Wonderful to see you as well. You take care. Till next time.